To start us off, I want to talk a little bit about the change in the growth trajectory that we're seeing in Colombia. Now, in 2022, we saw still some pretty exceptional growth continuing, even as much of Latin America saw a much more substantial slowdown after 2021. And consumer spending has really been the key driver of growth. But when we look at 2023, that's really going to change with inflation remaining high, along with interest rates also weighing more heavily on growth, on consumers in particular, but also on private investment. And at the same time, it's also going to weigh more as overall growth begins to cool, as well as the labor market. So a lot more of that impact is going to be felt in the real economy after this strong growth that we saw for 2022. And at the same time, we're going to see these dampening effects coming from elsewhere. One, the slower growth globally. We're going to see reduced demand for many exports, as we see recessions in key trading partners, for example, in the US in particular. And at the same time, domestically, we are seeing some challenges, particularly impacting private investment. There, we're seeing the Petro administration's reform agenda, which is generally seen as a disruptive force for the more or less favorable regulatory environment and business environment that Colombia has maintained for several years. So all of this is going to really shift that growth downward for 2023. And you know, we're talking about a shift between 2022 and 2023. But if we go to the next slide, we can see that in reality that shift has already begun, as inflation has already been rising, obviously, during the last year, and the effect of that on consumer spending in particular is already starting to manifest itself. And we can see that in particular in the final months of 2022, but particularly the fourth quarter of last year, when we saw consumer spending leveling off in particular. And this is a trend that's going to continue in 2023, and I expect particularly will be focused within the first half of 2023 as these conditions worsen, high interest rates and inflation. So if we go to the next slide, we can see what we're talking about when we're talking about inflation in Colombia. And it's a very complicated situation, even by regional standards. Now, what we're looking at here are the averages for each year of inflation. We can see that spike in inflation during 2022. And when we're looking at 2023, we see inflation virtually unchanged in average terms. Now, we're going to see inflation ease over the course of the year, but when we look at the overall weight of inflation month by month during 2023, it's still going to be extremely high. And again, this is going to weigh much more heavily as we see these other macroeconomic conditions worsening, along with those high interest rate levels that we're going to see. Now, when we look at the labor market in the next slide, what we can see is that we're actually seeing a bit of a bright spot as far as the macroeconomic outlook, where we have a labor market that's really in a position of strength, and that's going to partially mitigate the impact of inflation on consumer spending. And we can see here, comparing the last month of data, January 2021, with January 2020, before the pandemic, that we're above those pre-pandemic levels of employed population within Colombia. And even when we're comparing with a linear trend analysis of where the employed population would be absent the impact of the pandemic, we're also above those levels. So really a strong position for the labor market in general, which is also making Colombia a bit of an outlier on this metric. And that's important because it's going to mitigate partially, at least, some of the impact of inflation on consumers and on growth, whereas when we look at other markets that are seeing similar challenges, such as Chile, for example, we're actually expecting to see a contraction of growth compared to just low growth, which is what we're expecting to see in Colombia. So this is going to help mitigate that downturn in growth. And when we look at the fiscal situation in Colombia,
Oh, wait,
we can also.
one second, and I do want
Oh,
to revert back to the previous. Hi, Jessica. Can you walk us through a little bit in terms of how the employment, kind of that dynamic that Anders was talking about is going to impact the Social Security regime?
Yes, just briefly. So this does have an impact on the affiliation within the contributive and subsidized regime, which Carlos will walk us through a little bit later. But just to mention that it does directly impact that transition between the two regimes, though there's some uncertainty there with how things are planning to evolve with the healthcare reform. But we'll get into that more later.
yeah.
Go back.
Okay, thanks for that, Jessica. Yeah, so as you said, we'll be exploring that with more detail later. But looking at the fiscal situation, kind of the other side of the macroeconomic puzzle in Colombia, what we can see is that Colombia's on a gradual path of returning to fiscal balance following the pandemic and its impacts on the government's finances. And we can see the deficit is projected for 2024 to reach about 2%. And this has all been bolstered over the past 2 years, 2021, 2022 in particular, by this strong recovery of growth and tax revenue. We're also seeing the tax reform that was implemented last year that's also creating a support mechanism or a source for financing a lot of the expanded spending that the Petro administration wants to adopt, and also high oil prices, which are an important source of support fiscally, and we're seeing that continue during 2023. But we are seeing some risks to the fiscal outlook, and we can also see that when we talk about the oil situation in Colombia. If we look at the next slide, we're seeing again, this is a very important source of fiscal support for the government, and that's been jeopardized by the Petro administration and its refusal to award new contracts for oil exploration, as it calls for a more accelerated transition away from fossil fuels. Now, this is going to be more of a problem for the medium to long term. But when we look at more of the immediate future, we're also seeing some challenges, particularly as it pertains to the government's expectations for oil prices, as it continues to rely on this as a source through royalties of fiscal support.
Hi, my name is Krista Regani, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.